Nasdaq's rallying again one day after the index wiped out all of its losses since April 2nd. My next guest says he is cautiously optimistic on that sector. Let's bring in the venture capitalist, Rashaun Williams. Welcome back. It's good to see you.
Hey, thanks for having me. Good to be here.
Let's talk about the tech trade at large, mega caps, really. We took some x-rays this week. Did the AI trade get a clean bill of health in your mind?
I'm so glad you mentioned it because you know I was going to bring it up. We've been saying for the last few years that people have been investing in AI and we hope that it pays dividends. And I think we're actually seeing that now. You're literally seeing all this robust AI investment bring us home on the earnings side. And I mean, just look at the Microsoft, the Metas, and the Apples of the world. They delivered. So I had a positive experience in this past earnings season with the guys that have been over investing in this space. But I think there are some concerns out there still with some of the other names and some of the other sectors.
We had Robert Smith of Vista on a little more than a week ago, and he's all in on AI. And when I asked him the idea that he thinks we're in the very, very early innings of this belief, he couldn't have been more emphatic that, in fact, he thinks we really are. Do you agree with that? Are we still super early in the cycle?
Yeah, 100% I agree. First of all, anything Robert F. Smith says, you better take it to the bank and, and save it long term.
He seems to know like what he's doing and talking about.
Yeah, he's the GOAT in our industry. But I absolutely agree. If you take one step further than AI, everyone's going to be talking about quantum computing in 5 years, right? We're laying the infrastructure now. Once quantum gets into the mix, this AI world is going to take a whole nother level. But I do think we're probably in the third inning, working our way to the fourth right now.
Oh, interesting. How do you feel about the markets? It's been an unbelievable bounce back, right? 9 straight days. We're probably going to clock that today because we're well on our way to doing that. S&P, as I ask you this question, is up 1.5%. Is it too much? Does it have staying power? What are your thoughts in general?
You know, I'm a little biased. We have a lot of pent-up supply that we're waiting to hit, you know, the public markets with all of the financial sponsors on the private equity and the venture side, having all of this built-up supply. Look, at the end of the day, I'm cautiously optimistic. A year ago when we had this conversation, I said I was done with the IPO market. I said secondaries are the new IPOs. In fact, since then, 71% of liquidity events in my space have been in the secondary market. M&A is a distant second. IPOs non-existent. But guess what's happened between last year and today? In some way, we're increasing in confidence in this marketplace. Look at VIX. VIX has decreased significantly. And as you know, once we get below 20 in VIX, we're going to start seeing more IPOs happen. I think 80% of IPOs happen when we were sub 20 in VIX, right? And we were a lot higher, 6 to 12 months ago. After VIX comes down, you're going to start seeing multiple expansion, which we've been talking about a lot. A lot of these companies are waiting for these multiples to expand, and you can start to see the S1 registration start to trickle in kind of one by one. So you have a ton of supply, and you even have, I hate to even say it, I know it's a bad word on the show, SPACs are actually coming back to take advantage of some of the built-in supply. I had to say it. I had to say, hey, they're coming back. I'm not asking them to. They're just coming back.
All right. We'll talk to you soon. Be well.
All right. Thank you very much.